Good morning. This is Steve Jolly with the Music City Show, and I want to thank you for tuning in this morning. We've got a great show lined up for you today. We are going to talk with Nathan Shapler, who is a loan officer and an expert in loan and a friend of mine for several years. We're going to bring him in here in a second. We're also going to talk about the market update for this week. So I'm going to tell you about the sales, the number of new listings, how many showings are going on out there, and under contract. So I'm going to share you the good news, and I'm going to talk about where I'm concerned. But before we get into that, let's switch over and talk to my friend Nathan. There we go. Hey Nathan, how are you doing this morning?
Great, doing well, Steve. Great to be here and just chat with you about real estate, all things real estate, right?
Yeah, great.
Uh,
So tell me a little bit about your company, and then tell me what you're seeing in the market right now. Especially for the average client that may be looking to, um,
just to
buy a
kind of
home or
start looking.
refi their home.
Yeah, for sure. We can jump right into that. So I work for Van Dyke Mortgage Company. We're headquartered out of Grand Rapids, Michigan, but we're in like 48 states. We're direct to Fannie Mae, Freddie Mac, Ginnie Mae if we need to use that route for your loan. So that way we can make sure that we're going directly to the underlying guidelines, that we're not having to put on a lot of overlays. So whatever the requirements are is what we'll be lending to about 99% of the time. For the mortgage market, it's been a crazy roller coaster for, the last 3 or 4 weeks. We're in unprecedented times. I'm sure you're going to get into all the numbers before, but we're seeing insane unemployment numbers, people going into deferment, everything. And so with that, a lot of the mortgage companies are starting to put on overlays, and that's just a fancy word, basically saying that they're tightening up a lot of the lending guidelines. So overnight, we saw all of the non-traditional programs like the investor, there's more exotic programs like no stated income for investment properties, different things. They all went away like overnight pretty much. And I'm waiting to hear back on a couple of those programs if they're going to be coming back, if they're going to be coming back with increased or harsher guidelines for people to be underwritten to. But for the traditional, the core market that 99% of people are going to get for the FHA, VA, conventional loans, we're just seeing that they're starting to, some of the companies are adding on, slightly moving up the FICO scores to 640, 660, 680. It's not going to be anything drastic. It would just be a conversation that as the people are talking to the person, if they're looking at a house, they need to go and just have a conversation with a consultant that's going to go over their situation with them line item by line item. And so that's just kind of, I guess, a rough overview. So if there's something you wanted to dive into a little bit deeper, then we could do that too.
Yeah. So when you're talking about getting a standard mortgage right now, like a FHA or conventional loan, are you seeing the loan approval times? Are they getting longer than they were before?
That's a great question. And I guess the real answer would be it depends. Every company is set up a little bit differently. And frankly, it's all just going to be up to operations of the specific company, right? So if I put something into underwriting by 4 p.m., we'll be able to hear an answer the very next business day. So we're trying to still keep within 24-hour underwriting.
Okay.
And I guess the one thing is that, people have probably heard it's a great time to refinance. It's a great time to refinance. So like an insane amount of people are starting to put in their information to get a refinance at, every mortgage company in America. So really, it's just a factor of operations trying to keep up with kind of the demand, and so some of the companies, like, they actually increase their mortgage rates for the refinances just to kind of control the volume. And then as they get a little bit lower, they can lower them back down to try to pull in more business. And so it's just kind of having to maintain the supply and demand.
Yeah, that makes sense. But as far as your company, you guys are still approving within 24 hours, so that's awesome.
Yes, sir.
So tell me about I know a lot of my clients are worried about the jumbo market. So are you seeing that start to come back, or what are you seeing in that market?
Yeah, so we primarily use two or three different jumbo investors. They started moving down to wanting a higher down payment. The interest rates were not quite as amazing as, let's say, a conventional loan. For those people listening that might not understand exactly what the jumbo difference is, that's going to be any loan size that's going to be above $510,400, right?
Mm-hmm.
So when you start moving into kind of the bigger houses is when we're going to be looking at the jumbos. So a lot of the banks kind of tightened up on those guidelines specifically, and they would want maybe some more reserves or cash on hand, maybe a higher down payment. I've been using a strategy pretty effectively where we would actually buy the house with their first mortgage at $510,000. We could even put on like a smaller second lien from a local bank, and that way they would kind of have a blended interest rate, right?
Okay.
So it would be, the way I explain it to people is like, if we have like $100,000 second lien on the property that might be at 4.25%, maybe 4.4%, that's not that attractive, but then the underlying mortgage rate on the 510,000 is going to be super low, like that very attractive, I guess, a conventional conforming loan interest rate. And so if we go over the math and we take a look and say, hey, if we do the jumbo, here's kind of like what all the banks are offering in that range, and this could actually save you a little bit more money to go this way. So for some clients, it can make sense to definitely go that route still too. And the good thing about that is that's just going to be following the conventional guidelines, right, from
Mm-hmm.
Fannie Mae, Freddie Mac. We're not going to have to worry about kind of the overlays on jumbo products or anything like that. The second lien usually just uses the same appraisal. Everything just kind of follows exactly what we're doing, if that makes sense.
Yeah, for sure. For sure. And for my investor friends and for folks that want to keep a little bit more cash on hand, what are the HELOCs looking like, the home equity line of credit?
They're still, I haven't really heard of any banks that are freezing those completely.
Okay.
They're still, I actually have a couple clients that are going through and getting HELOCs right now just for different situations, and so, I would kind of say, we have seen in the past where banks have completely frozen HELOCs.
Mm-hmm.
So let's say you have a $100,000 HELOC on your house. The bank is like, oh, sorry, you don't have that HELOC anymore, right? So if you're kind of in a position where you might want to tap into that cash, particularly for a real estate investor within 3 to 6 months,
Mm-hmm.
it might make sense to draw out the portion that you kind of want to use, like the minimum amount. So that would really only be if you want to use it, within the next couple of months, right? But it could be, you could avoid the risk of them completely pulling the HELOC and putting yourself in a situation where you wanted to use that money and then it wasn't available.
Okay, that's a really good point. And you also brought up a good point to me last week when we talked about the forbearance and people going into forbearance and how that will affect them getting loans down the road. So would you share that with our audience?
Yeah, for sure. And this is, I'll caveat all of this by saying if you are being financially affected, just take the forbearance. It's there to help you. It's there to support you. They say it won't report to your credit, which is partly true and it's also partly false. Here's the part that's true. It's not going to hurt your credit score, and that was going to be what they reported in the CARES Act. But it still does report on your credit as you missed the specific payment, your loan is in forbearance. And they add like a little wording that says loan is in forbearance to that credit line item, which it's not going to hurt your credit score per se, but when the underwriter is looking at your mortgage to approve it, they're looking at your capacity to repay the loan, right?
Exactly.
And so if you tell the bank and say, hey, I'm going into financial hardship, can you put my loan into forbearance? Then that's kind of something that the underwriters have to take a look at. They have to get kind of an explanation for, and the guidelines that we have, they're just kind of common sense. If you're trying to refinance your mortgage, a couple people went into forbearance, they weren't really supposed to, or they, we had discussed, and I told them, hey, this is probably going to be hard to do, and all they had to do was get out of forbearance. We get that verified from the bank. They made their payment to catch up to where they're supposed to be. And I just get a brief letter from them stating, hey, I had this thing, or, here's how I recovered kind of from what I was kind of looking at the time. Boom, we're good to go. So if you're a real estate investor that's going to be looking to get a loan on a house within like the next 12 months and maybe even up to 24 months, or even just an average consumer, then it might not make sense to go into forbearance unless you really, really need to, I guess, from a financial aspect.
Yeah.
So, because, I was telling one of my real estate investors, well, actually a builder that I have, he put a couple investment properties around, and there's a bunch of people around that have been doing this. And so, it's kind of saying, hey, if you want to utilize your credit, for your business or personal reasons, then it might make sense not to do that. So
yeah, that's great advice, because I know a lot of people think that the deferment or the forbearance is just easy money, but it could affect you down the road. So if you're thinking about taking out a loan in the next 12 months to 24 months, it may not be the best decision. So yeah, thanks for sharing that with us. So what other advice would you give to clients that are looking to buy within the next year?
Yeah, I would really just tell them that they need to be getting on a game plan. If they already kind of have, if they can talk to you, kind of look at the houses, figure out exactly what the property taxes on that house are going to look like, the insurance, what their monthly payment is going to look like, then what they can do is they can be kind of working with the real estate agent and the mortgage person as a team, right?
Mm-hmm.
That they're going to kind of put together their plan, and they can once they kind of have an idea of what the ballpark range of the house that they're looking at is, they can look exactly at what the numbers are going to be for, I guess, maybe some of those closing costs, which maybe the real estate agent could work together with the mortgage guy. They could come up with a plan for that. If they want to ask for seller concessions, is that going to work in this neighborhood, in this market? Maybe it's not, maybe it will. You can really just put together your game plan for that. If they need to, right now specifically, especially if you're a self-employed person,
Mm-hmm.
and you haven't filed your 2019 tax returns, and that's going to be a huge opportunity right now up until July 15th, I think, when they're due, right?
That's correct.
Because we could still be looking at their 2017, 2018 tax returns. Maybe if 2017 is not good, but their business did a little bit better in 2019, then that could put them in a little bit more of an optimal situation for purchasing a house.
Oh, that's a great point.
But yeah, that's kind of, so I usually just kind of talk to the people as they're filing their tax returns and tell them, hey, this is the situation that we're going to be looking at now. So
yeah, that's great. That's a great point. And I like the idea of working, plan ahead, because sometimes people try to do this at the last minute and they don't get the home that they want or the deal that they want. And if they would have just planned ahead a little bit, it would have been a much better situation. Man, I thank you for your time today, Nathan. And if anybody has any questions for Nathan, feel free to reach out to him. His number is there on the screen, 469-378-8866. And his email is there too. Nathan, thank you so much for your time today. And I'm going to switch over and talk about the market update. And if you have any comments, feel free to leave them, or feel free to speak up in the middle of this. But thank you so much. So let's go ahead and look at the market update. And so we're going to talk about the closed sales for this week. So the closed sales for this week, since this is the end of the month, our closed sales are always up. So if you see all the spikes in this chart, you're seeing the end of the month for every month of the last 4 months. And so we are up 44% for the week, which is probably, a lot of that has to do with the end of the month. We're still down 20% for the year. And that's really the big key. And so in order to get those closed sales up, we really need more inventory. That's our biggest thing. Our trend for the closed sales, thankfully, is flat. We haven't really had we haven't really had a nosedive. We've kind of leveled off at this rate since the beginning of the year. And I'm really thankful for that. So let's now take a look at listings for the week. New listings are up 27% over last week, which is great news. And as I've told you before, listings are one of those milestones that you need to have in order to get the closed sales. So these are the leading indicators of our market. And so that knowing that new listings are up, that's a good sign, because we have to have those in order to have closed sales. And the trend for new listings is we're up 3 weeks in a row. So that's more good news on listings. We're still down 12% from last year. We were down as much as 15% a few weeks ago. So we need to continue to get those new listings in to keep our market rolling, because there is demand out there for homes. And I'll show you that right now. So here's one example of that demand for homes. You can see back in March where showings, as we were under the stay-at-home order, the showings really decreased to about 50% of what they should be, and they should be moving upward this time of year. But we're on a 4-week trend of moving up, and we're up 7% over last week. And we've had some huge increases over the last month. So this showings really shows there's even though some of these are virtual showings, there's still in-person showings going on. And so this really shows how much demand there is out there for homes right now. And this next slide, when we talk about the homes that go under contract, this really shows you some of that pent-up demand. So we're up 10% over last week. We're on a 4-week trend where we've been climbing about 10% every week. And we've done that we've gone upwards 4 weeks in a row. But unless we keep getting new listings, it's going to be hard to keep that streak up so we can catch up to last year and hopefully beat it by the year's end. So the demand is still strong. We're seeing that in the homes that go under contract. We're seeing that in how quickly they're going under contract. We're seeing that in the number of showings out there. We just need more listings. So if you're on the fence about listing your home, and you have some concerns about it, reach out and give me a call at the number on the bottom of the screen. I'll be glad to answer the questions and help you decide what's the best for you and your family. Speaking of homes and home values, if you're concerned about the value of your home, and we haven't seen prices dropping in Nashville. In fact, we've seen them holding steady. You can go to my site, which is NashvillePrices.com, and you can enter your address, and you can get up to 2 automated home values immediately. And if you like, I can do a custom home value for you based on the unique characteristics of your home. It's real easy to do. Just go to NashvillePrices.com, enter your address, and I'll take care of the rest for you. The next thing I want to talk about is next week. And I want you guys to help me program what we're going to be talking about next week. So either in the comments below or via text or email, let me know what your number one concern is about the market. What are you worried about? What is on your mind? Let me know, and I'll bring in the experts, and I'll bring in the information and data to answer those questions for you. So guys, I really appreciate you tuning into the Music City Show this week. I want to thank Nathan, my guest, Nathan Shapler, for coming in and explaining about the market, and explaining about what's going on in the mortgage market, because that's important to all of us. So if you have any questions, feel free to reach out to me or reach out to Nathan, and we are here to help you. Otherwise, have a good day, and peace and love, y'all.
Thank you, Steve.
Take care,
Appreciate it.
Nathan.